Hello guys, welcome. It's a Sunday, it's the best Sunday, man, the best Sunday. Yesterday we were doing a market review of USD. So we were doing USD yesterday on a Saturday, the 26th, of August. And now it's Sunday, the 27th of August, 2023, man, 2023. So uh today, like I said, we are going to do a market recap of gold, AX, AU, USD. So I'm going to look at what have been happening and how you could have caught and on made money. And I didn't trade gold this month. I haven't traded gold this month. So yeah. But I'm looking forward to the next coming month because my trading plan you know evolves around, starting a month, like going forward. So next month I'm trading gold together with USD 30 at the US 30. So for now, let's just do the market recap and see what's have been happening and how we could have made money. How we could have made money. So, guys, as you know, this is how we start. Those who are the loyal type, they know how we start. How we start is we go to a high time frame. Remember, guys, my name is Nasfred. This is a Nasfred channel, and on Instagram, I'm known as USD Ghost. USD underscore no, yes, underscore 30 underscore ghost. So my YouTube channel is Nasfred. So please link no, please like and subscribe, and my PDF, like my trading strategy PDF, will be ready soon for your own purchase, man. It's not free. It's not free. Mine is not free. There's the platinum strategy. Like I've been working on this. So we have the part one of the strategy that will be coming out very soon, which is the first strategy. It's composed of three chapters. So we get the first chapter, then you get the second chapter, then you get the third chapter. But this one is the one that I use and I have tested, and I like it very much. So as I said, guys, this is what you do. You go to a highly time frame, which is weekly or daily. But let's go to daily because we don't want to waste so much time. I've already done something like that. So you go to your daily time frame and you mark your zones where the market took or changed direction. All right, those zones that had high impact on the market. So as you can see, guys, you change first your chart style to a line graph. Then after that, because the line graph gives you the bodies, not the rejections. That's what's good with it. So here, these are the bodies here. These are the bodies. So you are certain that there are rejection above, but this is where the market closed. This is the close of the candle. This is the close of the candle, close of the candle, close of the candle, right? So as you can see, the market was very, very, very bullish this month. So this is uh, no, July, because no, this month we were selling since August started, like July, August. So we've been selling from July. Yeah, we've been selling from July, and before that, the market was very bullish, and we have a lot of imbalances to cover. Yeah, I think I'm not sure, but we get to that part. So since the beginning of let me change it back to, since we have marked those. I'm sorry about that. I'm sorry about that. Come on, man. Come on, man. Come on. Okay, okay. Since disappear, man, disappear. What are you still doing here? How? You. Uh-huh. Okay. Let not that disturb us. So since 10th of May, maybe before that, maybe the 4th of May, 5th of May, that was NFP, yeah, that was NFP. So since the NFP of May, we had the market testing our price and going to the downside. So this means that we are basically looking for sales here. Here we were looking for sales. So you wait for the market to give you a certain confirmation to start looking for the buys. But as for now, we are looking for sales here. Right. So let's see what happened and how we could have made money. So basically, what you're going to do is basically SMC. SMC is where now you say we're going to start here. By marking our since the bullish market. Okay, this is I'm not going to start far, man. We're going to all right. So what did we have? We have the market reversing to the upside, and which candle was responsible for that? This one. This was the candle responsible for remember guys, this is day, right? So you start I love starting on a forward time frame, but I'm going to start here so that we know what we are what I'm looking for. So again we had another break of structure here. So this is a break of structure here. All right. This is called a BOS. There's a break of market structure right there. So a major market break of market structure, and which candle was responsible for that? Let's check with, I think we have something here. We'll modify it when you get to a smaller time frame. Right? Okay. And yeah, now we can break it to H4. Let me close this. All right. Now we can go to H4. So this becomes your demand zone, right? This was your demand zone. Market came back to a demand zone. Started buying from there. Started buying there, right? Okay. So the POI, it was a POI. Before the market came here, this was your POI, right? So when the market was going like this and third version, you're like, yeah, I'm buying here to take profit somewhere else, right? So another point you should make is that we are marking supplies and demand. We are marking our supplies and demand. As you can see, we have the market coming, giving us a high, a low, breaking the structure, and giving us a break of structure again. This is a confirmation that now you are selling, confirming that now we are selling, right? So this was a break of structure. Okay. All right. This was the break of market structure. Or in other ways, it's your change of character. So you're not certain if the market is buying or the market is still doing its thing, but now it broke this low to show you that yeah, we're actually we're actually selling. And which one was your zone? This was your zone. This is the candle that broke your structure. This is the candle that broke your structure right there. So it's the candle that broke your structure. So this is the candle that broke your structure. Your supply, and you're certain that when the market gets back to your supply, you're looking for short time sales or for long time sales. I don't know how, because yeah. So you market supply zone POI. Supply zone POI. I like to make my supplies red and my demand zones red because that I can easily spot them. That's what I like. So now you have a supply zone here. You have a supply zone here. And what are you saying? What are you saying? What are you saying? The market reversed as soon as the market touched your zone, which was your demand zone here. Market reversed to the upside, right? Reversed to the upside. So when we got there, started going back to the downside. So this was your market correction. Like this, an impulse, base, impulse, base, impulse, and now you're looking for another indication whether the market is going up or to downside. I don't like telling people that buy this market from here to the year or buy this, do this, because we don't trade the same and don't look at things the same. But okay, now we have our supply zone. We have our trend. You know that the market is currently selling, and here the market is bullish. So saying is buying on high time frame. So let's go, man. Let's go. Let's go. So H4. 240. 240. So what I trade, guys, is I basically trade supply and demand, and I basically trade market imbalances. And for confirmations, I use chart patterns and I use candlestick patterns. Those are my confirmations, right? So those are my confirmations. So as we said, we have a supply zone. I have a supply zone. Okay. Now we're going to modify our change of character. So this becomes a broken structure. Now we are looking for change of character. No. I'm sorry about that. So this was the highest high. This is the low that gave us this high, right? This is the low. So this is our change of character here. Okay. A change of character, and the market failed to break here. Failed to break here, right? And there's a candle that broke that. So this is the candle that is responsible for that break. Let's see. And the market actually came back to retest, failed to break. From here, the market failed to break, came back, and let's modify it. Okay. Now we're saying this is the candle. Right. Okay. And since we have this candle, which is our supply zone, let's look for our market imbalances. So I love looking at market imbalances on 1 hour and from 1 hour and 15 minutes. But this, we're going to mark this as our market imbalance here. The tip of this candle. Yeah. And until here. Okay. So this is our market imbalance, right? So this means when the market gets to that zone, you're looking for sells. When the market gets to that zone, you're going to look for sells. You know, wait for the confirmation, then get your sell entries. Then get your sell entries. But market haven't give you that confirmation that is going up. So we're looking forward to enjoying the sell right here. You're looking forward to say, nah, I'm enjoying this. So this is what you call liquidity. Let's see. So before the market actually sells, I think it should take liquidity and you're going to have major sales from there. So if I was looking for sales, I wouldn't have traded with that confidence because I didn't have any indication. Because now basically I trade market imbalances, and I want you to understand that. And I love trading high probability setups, you know, where I'm confident that the market is actually a trade, like trading as a plan, like on high time frames. Because on a high time frame, you have confident that market is actually selling, right? And you can modify it to a smart time frame to take your entries. So let's get to this now. This is where we at. Where we at. Like, so looking for buyers here, you have your demand zone and you have your head and head and shoulder. Inverted head and shoulder. I don't know, it's inverted head and shoulder, right? Uh-huh. Uh-huh. Beautiful. Right. Mm-hmm. So from there, where's your entry? From there, where's your entry? Let's use smart mind. Let's use smart mind. Okay, let's take this. Yeah, let me show you something first. How to trade a head and shoulder. How you trade a head and shoulder. My PC is acting up today. So this is how you trade a head and shoulder, right? Okay. If break of structure, you look for your demand zone. Look for your demand zone here. And also you look for your market. Also you look for your market imbalance. liquidity, break of structure, or change of character, get down to your demand zone and your market imbalances. Then your first target, when you enter here, when you enter here, which one is the target? This one. This one is the target. And stop loss just right above. Right above. So this is how you trade an inverted head and shoulder. Okay, let's get to it. Okay, because the market first came to your zone, right? Tapped and tried to move, but didn't have the momentum to move to the upside. Came back down, took those entries out, which is liquidity. It came back, went to the upside. Still did not break this. Huh? So this is how you spot. This is how you spot. Right. There's the market going up, giving you this high, right? Let's make it clear to you. Let's make it clear. Because the market went down and started to reverse here. Gave you this high, came back, broke structure. Right? Broke structure. And which candle was responsible for that? This was the candle responsible for breaking that. So the candle responsible for breaking that. So this becomes your you modify this so that you can get a sniper entry. Since we are on each 4, you modify this so that you can get a sniper entry, right? So after that, you had also, after you target this becomes your target when you enter here. Like we said, when you enter here, no, let's move to a smaller time frame so that we can spot our market imbalances also. Yeah, this is a beautiful pattern, guys. This is a very beautiful pattern. Oh, no. Oh, it's similar to that one. Oh, yeah. Take your time in the market. Take your time, analyze. You can be wrong, but if you keep practicing, you get that one chance. One chance. And the skill reduces the probability. Like trading is like basically gambling. Understand? Trading is basically gambling, but with skill. With skill. If you have skill, it's not really gambling. It's a business now. business. So invest in your skill. Invest in your skill. Wow. So as I said, what you do is you spot your demand zone and you spot your market imbalances. So this is what you do. This is what you do. This is what you do. But gold does not move like your state, and it doesn't actually move like them. So it actually respects your supply and demand more than your imbalances. Yes, it covers imbalances, but what gold does is, after, even if like when US state, let me give you something. When US state gets your market imbalance, after it covers, it has to react first, then come back to your zone, right? Your demand zone or supply zone. So actually what gold does is it will just go straight to your, covers the market imbalance and go straight to your order block, right? So if you enter here, you can just go to 15 minutes to modify. I use 15 minutes or 30 minutes to modify. So you don't want to go to a very small time frame like 5 minutes where you miss entries. You have to like use 15 minutes. So I think 15 minutes is to use. PC is so slow today. I don't know why. Okay. So this is what I meant. When your state, your Nasdaq curve comes here, actually touches and closes, or 50%, then start moving towards upside. So, but gold actually goes straight to your POIs or your order blocks, right? So you come here. And we're looking to modify our. So let's look for a market imbalance on a 15 minutes, right? You have to be precise, guys. You have to be precise. So this is our market imbalance. Right. See, if you are too so you have your demand zone here. Where was it? Where was it? See, if you go to a very small time frame, you might actually miss your entries, right? So Come on, man, come on. Select it. So your demand zone, or you can just catch it on a 30 minutes, right? But this is basically how it went. Okay. So here gives you a double bottom and just certain you take your entries and this becomes a take profit. Just below your imbalance. Because you're certain that the market might come and cover the imbalance, right? Yeah. And that's how you take the entry. So you could have made a lot of money. I only use high probability setups because they are the one that I have confidence in trading. So then you have a break of market structure, and you have to search and look for the candle that are responsible for that break. That break. Okay. Came rejected, and which candle was responsible for that? So what was this? This was Friday. So this was NFP. So if you can clearly see the demand zone or your POI, I'll use came and broke the structure. Okay, see something. Let's see something. Yeah. Hmm. Out of your demand zone. Out of your demand zone. Tapped. And you had your a break. So guys, I don't know what you trade with, and I don't know how you get your confirmations, but in this instant, I'll use uh my chart patterns. Like here, I'll definitely use my chart pattern, and I'll get a sniper entry, because something like this I'll use. There's the first again. There's the first high, then you have the second consolidation. There's a small consolidation here, and then you have a breakout structure here, and this is how you mark your right. The first one will be like this. You want to catch let's say you want to catch this movement right here. Okay, right here. Because you have that, so let's say use this. Okay, so use this and use this. This is called asymmetrical. Like is it asymmetrical? No, it's not asymmetrical. This is a triangle. I don't know if it's a descending triangle or ascending. Because the low was the same, right? The low was the same, and you could have caught it multiple of times, but this is where I will actually take my trades here. This is a less risk entry. This will be a less risk entry. So this is 1, 2, 3, 4, 5, 6, 7, 8, or something else. So when you enter here, just below, then target. This is a target. But be careful, guys, as this sometimes is considered as this is considered as liquidity, because when the market takes orders here, just not gonna let people ride on it like until I think they have to take out certain buyers there, then they move to the upside. So this is where I would have taken my entries, because you have a confirmation, and also you have what you call the QM level. You know of the QM level. This is called the QM level. Here, there's a QM level. It's a big hit. It's a big hit. Big hit. Ascertain. Ascertain. Huh? Ascertain. So you have multiple confirmations. That's your trend line. The break. Then you have your demand zone. Then you have your market imbalance here. This is a market imbalance. Let's spot it. Let me show you where you have a market imbalance. So this is how you mark a market imbalance. So that will be here. This candle, and you have this. Then you have this. So this will be your market imbalance right here. This is a market gap. So So it comes, it covers and touches your zone. So you're entering, you're entering, you're entering, you're entering, you're entering, entering, then this is your take profit. So guys, that's basically what I had for you, and I haven't traded gold in a while, so I'm a yesterday man. I'm yesterday man. I don't play around. I don't play around. So uh also you can trade market imbalances at, you know, if you are, yeah, you are that confident with your market imbalances. So where's the market imbalance here? Where is it? Where is it? Where is it? That should be market imbalance. From this zone, this point. This point. Look at this gap. But if you go to 15 minutes, you're going to get exactly the precise market imbalance, because as the market impulses to the downside, they say, oh yeah, I'm looking for the market to correct, then impulse again, right? Then you're going to look for a sniper entry here. Yeah. As you modify to the lower time frame, this is what you're looking at, this imbalance. When a market impulses to like downside, or when the best take market to downside impulses, they leave a market gap behind. So this is what you are targeting. Okay, I'm looking at the zone. As the market gets to my zone, I'm looking for sell entries here, right? Okay, even the buys, even when the market is buying, that's what you do. As the market, you mark the market imbalance. Even here, say the market, okay, the market left an imbalance from here to here, so I'm looking for the market coming back to the zone so I can sell some more. As you can see, even here, I'm looking for the market to, you know, sell some more. You know, that's how you catch entries with market imbalances, with the market imbalances. So I've traded imbalances and I've seen that they work, and actually love using them on USDT or Dow Jones or Nasdaq. But even in this at this point, gold, as it impulses downside, it impulses. Like get this, you get actually get this. This was the 27th Thursday, right? 27th Thursday. So as gold impulses to the downside, it goes and it leads to market imbalance. This is where you can catch another movement. And with your target, if you enter here, if you're saying this is the full, this is the 100% of the market imbalance, and this is what I do. This is what I do. Okay, let me show you. Let me show you. Let me not waste and show you what I mean. Let me show you what I mean. Let me show you what I mean. What I mean. What I mean. What I mean. Whew. Look at that. Whoa. Whoa, 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 whoa. To get that impulse. I told you, when you get to a smaller time frame, that's where you get the the exact. That's where you get the exact. This is where you get the exact. Huh? Hmm? So as you trade gold, guys, please study your 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 pair and know how it moves. Know how it moves. Like this is the gun tool, right? I'm going to show you how you use it. I've been showing you how you use it. This I love being precise because it helps you risk your money better. No, right? Discount zone, premium zone, right? When it gets to your discount, There's the 25%, there's the 0%. And what you're saying is, I'm looking for entries here. When it gets here, I'm looking for entries. You wait for confirmation. You see top piñana, you enter, go to the downside, and you make your money, make your money. Let's say from the 50% of the 25 and the 0. Stop loss is right above the price zone. And if the market does not obey your rules, please don't take any actions. Because as you can see, this is a very large margin. It's a very large margin, guys. Right? If you're waiting for the market to come here and it doesn't, please don't take entries. If you are using the supply zone, because this is your supply zone here. This is going to be your supply zone here. This is going to be a supply zone. Wait for it. Wait. Be patient with the market. Be patient with the market. Okay. I think we understand each other. Even this side, even on this side, the market was actually moving, covering its imbalances. So here you have an imbalance from here to here, market reaching and went to the downside. Yeah. So that's it, guys, about AX. It's a Sunday. That's it about the XAU. And I'm looking forward to trading with you guys. And this video, I'm just making it so we can recap together and you can see how you've missed and what you could have had in the market. This is not really me teaching, just a recap. So enjoy your Sundays, guys. I'm looking forward to seeing you next week, which is tomorrow. Enjoy your Sunday. Have a blessed Sunday. US Day to Xauusd Instagram. Nasfred is my YouTube channel where I give you forex content and I give you investments content and I give you financial. I'm not a financial advisor, guys, but this is where I give you certain ways you can make money on the internet that are legal and approved. And I want you to make money as other people are making money in the markets. So enjoy your Sunday. Have a blessed Sunday. I'm cool. During Sunday, I'm cool. I'm not that loud as in the previous days. I like to be, calm, but I still have time for you to say, no, let's get it. Knowledge is always available with me each and every day. I love working and enjoy this. Thank you very much. Please like and subscribe to get more of my content and to encourage me to keep sharing my content with you. So thank you very much. It's a blessing. It's a blessing. It's a blessing. It's a blessing. Blessings to you.